Good evening, everyone. We shall start this session in another 30 seconds. Good evening, everyone. Welcome to Stock Durbar. My name is Rajshekar Kongari, Equity Research Analyst. In this session, we shall start discussing how the Nifty is placed at the current moment, and we'll discuss about a few major sectoral indices which impact or which have higher weightage in the overall market, and how are they placed at the current moment. Then we'll open the floor for questions, which are mostly stock specific queries. We'll be answering according to our own methodology. So first 10 to 15 minutes will be mostly about the market dynamics, and then we will start opening the chat box for queries. You can start posting your stock specific queries. Also, remember, don't repeat your stock specific queries, because it becomes very difficult for us to see the stocks which are asked by the customers here. Also be very specific if you have any query, so that we'll be able to answer it. Okay, so let's look into how the Nifty is placed at the current moment. As you can see here, this is a Nifty's daily chart. If you open MarketSmith India's web page, currently we are in a confirmed uptrend with a distribution day count of 1. Hi Anurag, will as mentioned already, we'll start answering stock specific queries in 10 to 15 minutes. First, we'll discuss about the market status and how the market is placed. Coming to Nifty, we are in confirmed uptrend. Recently, we have changed the market status to confirmed uptrend after we had a good follow through day. Since then, Nifty added 2 distribution days. One is around this area, and second distribution day was added here. One distribution day was added here, and second distribution day was added here. So distribution for the newbies, distribution day is when the Nifty declines 0.2% or more on volume higher than the previous session. So why is it important for our methodology is that as we are in confirmed uptrend, it's very important. It's very important for us to identify the market top. So it's very also it's very difficult to identify the market top. We are pretty sure that we are not going to catch the exact market top, but we'll use our tools to identify market top nearly like 4 to 5% from the market top, so that the market is topped out and weakness has crept into the markets. So distribution days gives us a clear view when the market is having weakness. So Nifty added 2 distribution days, and 1 distribution day has expired during this week. Why? Because after occurrence of distribution days, after 25 trading sessions, that effect of the distribution day will be nullified, because it has happened long back. So historically, we have this is a data-driven approach. So after 25 trading sessions, we'll nullify that distribution day, and we'll discard that distribution day. So currently, even though 2 distribution days were added, current distribution day count is at 1. However, you can see lots of sessions and Nifty has closed more than 0.2% during the recent times. However, because of lower volumes, Nifty escaped distribution days. Talking about today also, Nifty closed nearly more than 1% lower. However, the volume in the today's session was lower than the yesterday's session. That is the reason today's session doesn't qualify as a distribution day. Here, the volume candle is not updated at MarketSmith India. It will be updated by 5:30 to 6 p.m. You can see here yesterday's candle, we had a very good volume, and the volume was above average. Today it was slightly lower compared to the yesterday's session. So hence we are not considering today's as a distribution day. Recently also you can see on Monday Nifty gap down, but the volume was on the lower side compared to the Friday session. Hence we have not considered that as a distribution day. Thus the current distribution day count is at 1. Talking about market movement during this week, starting on Monday, we had a huge gap down. Nifty opened nearly 2% lower, mostly because of US market closed 3 to 4% lower on Friday. So taking those global cues, Nifty also opened 2% lower. However, you can see as the session progressed, Nifty tried to pare most of its losses. It closed in the upper half of the day's trading range. That signifies the strength in the Indian market. You can see closing at the upper half indicates a good buying happening in the market. In the follow-up session, that is on the Tuesday, you can see Nifty open on a gap of opening, and you can see on the closing basis it closed at the near the day's high. This again signifies very strong buying happening in the market. Also Nifty reclaimed its 21 DMA on Tuesday. Today again some weakness because of global cues and other reasons. Nifty opened lower. Also today being a weekly expiry, it was a very highly volatile trading session. I can see the movements were either ways 200 300 points either ways. If you open zeros daily chart, you can see after opening lower, you can see in the first half an hour to 1 hour, Nifty gained more than you can see 200 points, and it almost touched 17,700 level. However, after that, around 10:30, again selling has crept into the markets, and till 2 o'clock, it was a unidirectional. That is, huge selling happened. Total gains which has Nifty gained in the opening 1 hour were given up, and in the last half an hour, it was very highly volatile because weekly options were expiring at that particular time. So more or less, I can say today's action is it's a options play rather than equity play. You can also the volume was on the lower side, so it's definitely a options play. So it's very it's also Nifty escaping a distribution day is also a very good sign because accumulation of distribution days will put us in pressure, and anything distribution day, anything count of anything around 3 to 4, and Nifty trading below its key moving averages will put pressure on us to change the market status to under pressure. Currently, you can see Nifty is trading slightly below its 21 DMA. However, it is trading above all its other key moving averages such as 50, 100, 200 DMAs. So as long as 200 DMA is held by the Nifty index, we'll be continuing to be bullish on the overall market. Also, globally, there has been lots of negative pointers coming up. China's housing is in very bad shape. That is also one reason for the sell-off happening in the Chinese market. And Fed has also given lots of statements related to its inflation and interest rates. That is the reason gap down was happened on the Monday session. Relatively, and if you compare global markets and Indian market, we are at a very good state when compared to others. We are very resilient in terms of market and economy both. A few macro pointers came in. That is GST collections for August month came above 1.4 lakh crores. So these GST collections have been above 1.4 lakh crores number for the 6th consecutive month. This is a very good sign for the Indian Treasury. And also FPI's inflow for the month of August also came in more than 50,000 crores, which is also a very good sign. One of the major broker has also given a few pointers related to Indian market. They are very bullish on the Indian market. They are expecting Indian market to grow 7% in this current financial year FY23, and also Indian market is expected to be uh, leading market in the overall globally and Asia as well. And during the week, Reliance AGM has also happened. One of the major announcement is that the company Reliance is about to invest nearly 3.5 trillion into various businesses. 75,000 crores is expected to be allocated for petrochemicals, and around 2 lakh crores is expected to be allocated for 5G spectrum and 5G rollout, which is expected to be done by December 2022, 20, and in major cities, and by the December 23, most of the cities will be in India will be covered by 5G. Coming to sectoral indices, Nifty Bank has a highest weightage in a Nifty index, so any movement in Nifty Bank will definitely impact the overall market. It was a similar action compared to Nifty. You can see Nifty Bank is trading above its all its key moving averages at 2100, 50, and 200 DMS. And also the market status on Nifty Bank is also confirmed uptrend. Monday, you can see Nifty Bank gap down and it closed below its 21 DMA. Tuesday was a very strong action, similar to the Nifty's action. Today's candle is not updated here, but it has closed nearly 0.6% lower in the today's trading session. Okay, and this is one of the key metrics we maintain internally. This is related to sectoral coverage. I can see most of the sectors are in a rally, apart from the Nifty IT and Nifty Energy, both are in under pressure. And also other metric is that all these indices are trading above its 50 DMS. Nifty and broader indices like Nifty mid cap, small cap are also trading 6 to 7% above their 50 DMS. Other sector indices like Realty Bank, Pharma, every other index is trading above its 50 DMA. Only three indices, that is Nifty small cap and Pharma IT, are trading below their 200 DMS. We would like these indices to be also trading above their 200 DMS, so that there will be overall broad-based buying happening in the market. Talking about distribution days, you can see there has been a good accumulation of distribution days on various sectors. You can see Nifty IT has a distribution day count of 7. That is the reason we have changed the market status to under pressure when talking about Nifty IT. And in energy also, distribution day count is at 4. That is the reason in Nifty energy is at under pressure. Apart from these, other indices are trading pretty much good in terms showing very good signs of strength as well. I'll take Nifty as well. You can this is a Nifty IT is a daily chart. You can see it is a underperformer when compared to overall other indices. I can see around 28% of off highs. Off highs is when you compare with the all-time highs to the current market price. It is around that 28% down. You can see Nifty IT has just trading near its 50 DMA, but clearly trading below its 200 DMA. So we would like these index also to reclaim and trade above its 200 DMA, which is a black line. So when that happens, there will be overall broad-based buying happening in the market, and most of the breakouts in such a scenario will be successful. Whereas in the current market, because of the high volatility and not so much broad-based buying, some of the breakouts will be successful and some of them will be unsuccessful. So that is the reason we should be very selective while taking fresh additions. We should be looking at most of the parameters like fundamental and technical price volume also should be looked at while taking a fresh entry. I think now we are good to go with the stock specific queries. Already we have 3 to 4 stock specific queries, and I am being joined by my colleague Mr. Rushit. He will also be joining and he will also be answering your queries. In the meanwhile, our head of research, Myresh Joshi, is also expected to join, and he'll also be giving a few pointers in between.
Rad, I can start with Tata Elxsi.
Sure, Rushit.
So guys, it's one of the top multi-bagger in the Indian market. And yes, the main problem over here is the high base stages. I hope most of you might be aware about the business that it provides the design as well as technology services to this automotive industry, then broadcasting industry, communication related. यहाँ पे वो सब जगह पे that provides design as well as the technology, and they are continuously increasing the market share. टाटा का बैकिंग है, मार्केट शेयर इंप्रूवमेंट हो रहा है, ठीक है. देयर फोकस इज ऑन न्यू टेक्नोलॉजी, एंड नाउअडेज इन द ऑटोमोटिव इंडस्ट्री, टेलीकम्युनिकेशन, एवरीवेयर द न्यू टेक्नोलॉजी ग्रोथ इज वेरी गुड. एंड आई थिंक जब ईवी कार आएगा, ठीक है, जो ऑटोमेटिव ऑटो कार्स है, वहां पे टेक्नोलॉजी इंप्रूवाइज हो रही है. सो इन ऑल दोज एरियाज टाटा एलेक्सी इज वन ऑफ द लीडिंग प्लेयर. And the price, it keeps moving higher and higher, but the main problem is the higher stage bases. Raj, if you can show the base, yeah, it's a 4th stage base. So after the breakout from this, see, that's what we always discuss, that first second is fine, बहुत ही अच्छा स्टोरी है तो थर्ड स्टेज ले लो, बट जब 4th स्टेज बेसिस से ब्रेकआउट होता है तब रिवर्सल शार्प होता है, एंड दैट इज व्हाट इट हैज हैपेंड. After the breakout, it went higher almost 20-25%. But as Raj is indicating, you can see there was a sharp fall after that. So it went above that, psychological mark of 10,000. And there was a lot of discussions here and there about that 10,000 mark of the company. But I think it failed to hold that gains. And there is a sharp reversal, almost 15 to 17% of reversal from the high. And currently it is, coming close to its 50 DMA. So ideally, if you are holding a stock, the disclaimer is clear that it's not an advice to buy or sell any of the index of the stock. But yes, if you are holding the stock, then ideally 50 DMA should be an important level to watch, which is very close to it, just 3 to 4% from there. And if you want to take a fresh entry, then ideally, according to O'Neill, the base is too high. So let it form a, go through a phase of consolidation, let it form a fresh base. Reset जब base होता है, ठीक है, उसके बाद ही ideally fresh entry is suggested. So that's for the stock. Next, we can take IDFC first and then Tata Chemicals. So yeah, there is a strong reversal over here, right from somewhere around 30, 28, 30 rupees, right? Couple of months back, there is a excellent rally in the stock and has almost reached the 50 rupees level. But यहाँ पे कोई इतना base setup नहीं है. Fundamentals overall Indian banking sectors के gradually improve हो रहे हैं, and same goes with the IDFC First Bank. But अगर आप देखें कि there is no significant increase in number of fund holdings, right? Return on equity is very poor. However, since last few quarters the earnings are improving, buyer demand is very good. But एक चीज है, always around 50 rupees, 50 to 53, it finds resistance around that zone. So yes, not an ideal place to go for, because it's last 5-6 months back also around the same level. But there was a 50 DA, sorry, 200 DMA, the black line resistance. But then also this ये supply zone है यहाँ पे 50 to 55 वाला. So ideally avoid. But I think ये stock 28 rupees से 50 rupees का rally हुआ है, then ideally it should form a base now over here, right? So the first condition to form a base is that there should be some 20-30% of rally, right? After that there is a base formation. So I think the rally phase is done, and there are probabilities that a base can be formed. If not, the ideal situation is to wait for the base formation and do not take the aggressive entries. Otherwise, overall technical setup, the ratings are quite good. The relative strength line is improving. Buyer demand is excellent, A plus, and the group is doing quite better. So private banks, even the PSU banks, यहाँ पे अच्छा momentum है. So next we can take Tata Chemicals. So there was an excellent rally in Tata Chemical, but it failed to break out from the base. एक बार intraday breakout दिया था, but it didn't close above its pivot. But it found support near the green line, which Raj is indicating यहाँ पे. So that is the 21 DMA. So it found a very good support near that line. Right, but overall it is not able to break out. However, the result was very good. I think the June quarter result was excellent. उनका earnings improve हो रहा है, revenue growth is very good. The prices that soda ash business, the way they are gaining the market share, their prices are increasing, the demand of soda ash and also the other chemicals that Tata Chemicals deal with. So this is one of the leading player, in basic chemicals, and they also have a very good blend. I think 20-30% of revenue comes from specialty chemicals and the rest from the basic chemicals. So overall, it's a very good growth story, right? The demand around the chemical industry, especially after some setbacks in Chinese chemical industry. So the demand from the India is growing well in the Europe, in the US, or in the other parts of the world. Plus the domestic consumption of soda ash is also very good. So overall the growth story looks quite good. एक earnings का इसमें थोड़ा पहले problem था, but they have now improved. And the main part, see, number of fund holdings have significantly improved, almost 12% growth in last quarter. So this is what the indication by Raj over here. So overall story is good, but wait for the breakout. I think after a strong momentum, एक बार gap up दिया था, उसके बाद exhaustion gap के बाद it is trying to move sideways. So let it complete the consolidation, and once it comes in an ideal buy zone after the breakout, that is the ideal point to go for it.
Thanks, Rishit. I'll take a few queries now. I'll start with Uflex.
Sure.
Okay. A disclaimer is that we are currently invested into this stock. It is a portfolio stock. We are at a gain of 16%. We added it on August 11th. That is on the day of breakout. You can see here it was a very strong breakout. The volume on the breakout was 9 times the average volume. That indicates a very strong buying happened on that particular day, and that is a very good sign for breakout. Also, you can see during the base formation, during this phase I'm talking about, you can see the volume was on, mostly it was on the below average. That is lots of consolidation happened. Very few investors are trading this stock during this phase. This is what we want in an ideal base. Not much institutional activity to be seen during base formation, but you can see the right side of the base again. Good accumulation happened. Again, a good sign of proper base formation. And during handle, you can see again the volume was slightly lower, below average. That indicates weak investors are shaken out. They are exiting that particular stock at this particular point. So we are not bothered about weak investors. Only bothered about the strong big money investors, which is signified by the volume bars here. You can see after breakout, you can see there was very good accumulation happened also. That is the reason stock has also hit power to pivot. That is, it has advanced 25% after breaking out within 3 weeks. And in the last 2 to 3 sessions, there is some consolidation, and the stock is also succumbed to profit booking in the last 2 to 3 sessions as well. So by going with the both the fundamental story, which is very good. You can see EPS rank of 96 signifies a good profile of earnings by the company. Technicals, as I mentioned previously, good base formation and good breakout, price strength of 82, buyer demand of A plus. These are the reasons we have taken entry at this in this particular stock, and we continue to remain bullish in this particular stock uh, because the overall market is also in a very good momentum, and this stock is also outperforming the majority of the stocks. So we continue to remain bullish. And if there is some profit booking happening in this particular stock, we'll try to decide levels and we'll communicate the same to our clients as well. And taking a fresh entry at this particular point is not advised because it is very much extended from its moving averages. You can see from pivot it has advanced nearly 20% now. So any general weakness in the market will take these stocks badly. Will These stocks will get hit badly, and your stop loss might get hit within 1 or 2 trading sessions. So taking fresh entry is not advised. And if you are holding this particular stock, you can continue to hold it. And after 20 to 25% of gain, you can also book some partial profits if you are want to book out a few stocks. Okay, I'll take SRF next. Okay, stock broke out today during market hours, and the volume was also very much higher. You can see it's almost double the average volume. Most of the parameters are looking pretty good. Fundamentally, very strong company. EPS strength of 98 signifies that. Only reason is that price strength is slightly lower, which is 58. However, the line is also trending higher. We would like price strength to be around 70, 75 that level. By that time, the stock will also go above its ideal buy range. Otherwise, the stock is looking pretty much good on most of the parameters. You can see number of funds invested in the company have also grown nearly 10% in the last quarter, indicating fresh institutional buyers taking a position in this particular stock. Uh, the base formation is not so proper. You can see here during the base, there have been pink candles above average candles. So we would not like them because we would want pink candles to be below average. Also, on the right side of the base, that is this area, we would want the volume to be on the higher side. That is the blue candles, the volume should be on the higher side, but the volume stayed below average. So not so good base formation, but overall it's a very good story. Fundamentally very good story, but the technicals are not so much uh, strong at this particular point. That is the reason we have not taken position in this particular stock. Currently market is you can see is highly volatile. So in this particular in this kind of markets, you should be if you are 100% sure sidelines. There have been lots of queries. I'm picking randomly. There is no any mechanism taking a stocks here. I
As
will
I
go
can
with.
take Delta Corp now.
Okay, okay. Which one, Rashid?
Delta Corp.
Delta Corp. Okay.
You are taking some queries?
Sorry, Wokar?
Rushid is taking some queries?
Yes.
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 Okay, okay, fine. I'll go after you then.
Okay.
Okay, so if you look at the setup of Delta Corp, right, it is facing a resistance around this pink line. That's 100 DMA, right?
Correct. The pink line is 100 yen.
Yeah, but it is getting a very good support near its 21 DMA. So I think after a breakout 3-4 months back, there was a sharp fall, and there were this news related to GST increase on this online and this gaming and all. the casinos and all. So that's why there was a lot of tension around this stock, but I think it formed a very good base around 160-70 level, and since then the accumulation is very good. So just look at the volumes when the stock was going higher, right? The volume was very strong when the stock was going higher since last 2 months, and similarly when there was a brief correction in the stock, let's say from 207 to it again came to around 190 level, right? At that point of time there was some pullback, but the volume was comparatively lower, and then again the volume spiked up. And one good thing to note over here is that on the very good gain days, right? Let's say whenever it goes up 4-5% in a one day, closing is near the day's high. So this is something you should always look for कि कोई भी स्टॉक जब ऊपर जाता है या नीचे जाता है, इंट्राडे मूवमेंट ठीक है, वेरी इंपॉर्टेंट, बट क्लोजिंग उससे भी इंपॉर्टेंट है कि वो क्लोज कहाँ पे हो रहा है, डेज हाई पे हो रहा है, मिडिल में हो रहा है, या डे लो पे हो रहा है. So ideally you don't want something to close near day's low even if it is going on the higher side, right? And similarly if it is going lower but the closing is coming very close to the day's high, then that setup is good. Over here you need some base formation, and I think there is some 20-30% rally from the bottom already, right? 28% rally to be precise from bottom. So maybe it might form a base over here, and once it forms a base और थोड़ा फंडामेंटल इंप्रूव हो जाए, देखिए ओवरऑल इंडस्ट्री अच्छा मूड में है. अगर आप दूसरे स्टॉक्स देखिए ये ग्रुप में, specifically related to hotels, right? So there are likes of Lemon Tree, Indian Hotels, बाकी के जो है they are trading near a 52 weeks high, but यहाँ पे इतना थोड़ा लैग कर रहा है इंडस्ट्री को. So let it form a base, and वहाँ से एक fresh entry जब breakout होता है तभी लेनी चाहिए. Otherwise there are other stock in the industry, not the exact one because casino is only run by the Delta Corp guys, but yes, if you look at the hospitality industry, that's doing really well, so you can look around that. But yes, again when this forms a base over here, let's say 200-230 के around ये base बनाता है consolidation और cup with handle, so that is where you need to keep track of this stock. RS line भी बहुत weak है, price trend 26 is very weak, let it improve. EPS weak है, सो आई थिंक एक या दो क्वार्टर का रिजल्ट भी देखना पड़ेगा और टेक्निकल सेटअप देखना पड़ेगा, एंड देन यू कैन लुक फॉर द स्टॉक डेल्टा कॉर्प.
Rushita, which stock you want?
Yeah, we can take Kotak Bank.
Okay.
So see, the stock is moving sideways. The banking sector में एक अच्छा rally है. So this stock is clearly underperforming the current bank Nifty rally or the private bank rally. If you see HDFC, so that is off lows, right? यहाँ पे अगर ICICI देखिए नया हाई बना रहा है, और भी प्राइवेट बैंक्स देखिए, PSU बैंक देखिए, SBI में अच्छा इंप्रूवमेंट है, फेडरल बैंक इज डूइंग वेल, बैंक ऑफ बड़ौदा इज मेकिंग हाइज, Canara Bank doing well, but you don't see the similar likes in the Kotak Bank. It is still going through a consolidation phase, जो 1900 to 2000 का लेवल है, और you can broadly you can say 1800 to 2000 वहाँ पे इसका सप्लाई जोन है, and it is moving sideways. Similarly 1600 to 1700 के बीच यहाँ पे एक अच्छा डिमांड जोन भी है, so it is not going below that level also, and on the higher side it is finding resistance near 1800 to 2000 zone. So let it move out of that zone. Fundamentally अगर देखें तो results overall there was no major issue, asset quality NIM, but yes, overall if you can see the number of fund holdings has also improved, but it is no, there are a lot of other banks who have given some superior results compared to the Kotak Bank, and their position is even better than this one. So that's why I think it is not getting the momentum which ideally one should look for whenever the bank Nifty is going, because this is one of the leading stock as far as the private banking stocks are concerned, along with the likes of HDFC, Axis, ICICI, right? But it is not able to move higher. So give some time, let it complete the base formation. जैसे base में जैसे Rajshekhar is indicating, let it first cross this level 1950 2000 एक बार cross करता है, then I think it might move higher towards the second resistance जो कि previous high था, जहाँ पे अभी base बन रहा है consolidation, and I think after that you should look for the fresh entry according to O'Neill. But yes, for aggressive investors, there is a possibility of a breakout within the base around 1950 2000 zone. But उसके लिए relative strength should improve, and the buyer demand should also, I think, move to A. So that will be something to look for in the Kotak Bank. So guys, that's why when you look at CanSlim, CANSLIM. So L, the L in the CanSlim stands for the leaders and laggards. So leader and laggard not only in terms of the market share, not only in terms of fundamentals, but also in terms of price. जो L होता है वो leader होना चाहिए price में भी. So here Kotak Bank is not able to satisfy that L factor as far as the price is concerned. So it is lagging the group as a whole. So that's why L factor is very important. All the leaders, any stocks that are making new highs, they are calling leader as far as the price is concerned. Right? So that's why buying at 52-week high is always a good idea. And rather than the traditional going for bottom fishing. So what William O'Neill always suggests is buy high and sell higher. So it's not about buying at the bottom and waiting for the things to turn around for a longer time. But with a limited capital as a retail investor, it's always a good idea to buy the stocks at a new high whenever they are breaking out of a quality base. Maybe Vakar might take for a couple of queries.
Yes, thank you. I'll take a couple of queries. Raj, can you give me the chart for Paradeep Phosphate?
Which one, Vakar?
Paradeep Phosphate. Initially, like
Sorry?
I saw Paradeep, PARADWP. Yeah, the second one. Yeah, Paradeep.
Okay.
Yes. So, I mean, let's first talk about on the technical front. So, I mean, the stock is not formed any technical base at the moment, and why it didn't form the IPO base as well, because even if you talk about the first candle, I mean, the first candle's low was undercut as well. So that's why even the IPO base was not formed. And overall, I mean, even in alternate entries or the other points cannot be looked at because this stock has a very short trading history at the moment. So very few trading averages are at the moment getting accumulated for the stock. However, if we talk about on the fundamental front about this stock, the stock is like a pure play on the fertilizer segment, and it is India's third largest phosphatic fertilizer. I mean, third in terms of if we take the entire gamut, and two in terms of your private players, not your government one. So even it's really scaling up its capacity to touch 1.8 million tons by Q2 FY23. It made an acquisition of Zuari Chemicals, a Goa fertilizer plant for an EV of around 28 crores to expand its size and reach. I mean, it's majorly into non-urea. So this had some kind of urea play as well. So it expanded on that front as well, and it has a decent market share in the east of around 9%, west at around 8.5 9%, and going forward with your fertilizer shortage, to probably there is fertilizer shortage in the Indian industry at the moment, or the Indian macro setup at the moment. So that is likely to ensure quicker capacity utilization for the company as well. And with the company being almost is fully backward integrated in the sulfuric acid segment, and will be around 70 to 90% uh, backward integrated in the phosphoric acid segment as well. These two being your key inputs for your manufacture of your DAP and your NPK, which is the fertilizers they sell out. So that will they being completely backward integrated will lead to higher EBITDA per ton or higher margins for the company as well. But if we talk about in terms from a canceling perspective, till the stock doesn't form a proper base and breaks out of a proper base, any entry into the stock will not be advised at the moment. Uh, the other stock that we look at it is Astral. So yeah, the stock is forming a double bottom base and stage one double bottom base. Overall, the stock has been finding support near its key moving averages, and even today's action was uh, kind of very encouraging. If you look at it, I mean, it moved around 4.5% higher, and even was Rushit was talking about to probably close near the day's high. I mean, if the close is near the day's high on a very high volume, that becomes a really good sign. So that is really good about the stock. Even if you look at the right hand side of the double bottom base as well, there the stock has been accumulating decently. I mean, but still not a very ideal base if you look at it, because there are still some red candles above the 50-day moving average line, which is not a kind of a good sign. But if you look at the last 8 to 10 sessions, I mean, you can see very big blue bars happening. So that is something really encouraging at the moment. And if the stock is able to break out, then probably someone can keep it in its buy watch list at the moment. But what uh, is uh, not fitting in the canceling perspective at the moment is like probably the number of funds and the share held by funds is declining at the moment. So we always talk about your smart hands coming into the picture, or your institutional support. So at the moment, probably that's the only point where the stock is not able to garner some institutional support. If we talk about from the fundamental perspective as well, even the last time or probably in one of the pre-bells or after hours, I discussed this talk. I mean, overall, the result was fair enough in terms of the growth trajectory. The margins did suffer for the company, and even for Q2 as well, the company is will be seeing muted margins only, mainly because on account of the volatility in the polymer prices and inventory losses. So what happens is when your polymer prices go down, there is a scenario when the dealers and distributors keep low inventory. So even the company is expecting your EBITDA margins to probably improve from your H2 FY23 or Q3 and Q4, which is a good sign. And if we talk about the long-term growth horizon for the company, the management is aiming to double its top line in the next 5 years. If we talk about the last decade or maybe last 7, 8 years for the company, it's the only company in the piping segment which is able to provide an industry-beating volume growth as well. So that target pretty much looks achievable for the company as well. And with still your real estate segment in favor at the moment, you can probably um, uh, this one stock which can probably not be neglected. But let's see how the stock behaves around the pivot, and if the stock is able to provide a breakout in like really not just above average volume, but really on a very high volume and a very stark and sharp move, which probably leads to the price strength even going higher, then one can probably consider the stock as well.
Okay, Vakar, I'll take a few queries now.
Oh, okay.
Of Fineotex Chemicals, another query has come up. Stock is looking pretty good on most of its parameters, both fundamentally and technically. Uh, you can see here as soon as you open the chart on MSI website, EPS of 93, price strength of 93, and buyer demand of A plus signifies a strong ratings when compared to other stocks. It's a small cap company. It's a market cap of 3,000 crores. Number of funds invested in the company are just four. We would want the number of funds invested to be at least around 10 funds to be invested. Uh, but that number is lower because of being a low market cap company. But it is a very strongly growing company. There is no doubt about it. You can see EPS has been growing in higher double digits, and sales have also been growing higher double digits to nearly triple digits, which signifies and which are the most important characteristics of a growth stock. The stock has also broken out of its stage 4 cup with handle recently. That is the first week of August, and also it has hit power to pivot, but being a late stage base, it's also a risky proposition if you are taking late stage breakouts. But the reward will also be on the higher side because it's mostly risk and reward are mostly proportional. So if you are taking higher risk, the reward will also be on the higher side. That is what happened in this particular stock. If you are taken position, you would have made a good amount of money if you have added the stock on breakout. You can see in the today's session also the stock closed more than 13% higher on volume, higher than significantly higher than the average volumes. The last couple of sessions and in the series of sessions near the breakout also, you can see there have been very good amounts of volumes happened. That is 4x 5x times average volumes. This is a very good indication of a strong breakout. Previously as well, that is a stage 3 breakout which happened in December. You can see near to its breakout, I can see the volumes have been significantly higher. That is the reason we always couple volume action with the price action, so that we'll get a clear view if you're talking about a particular stock. Also during the base formation, you can see here again it's a very good proper base formation. The volumes during the left side of the base formation have been significantly lower and they have been declining. On the right side of the base, you can see good volumes have started to increase, and they have been on the above average times most of the times. So this is a very good sign of proper base. That is the reason the results have also been very good. The rewards have also been very good in this particular stock. Talking about taking a fresh entry, this particular stock is not advised because of highly extension from its key moving averages. That is around 75% extension from its 200 DMA, and also around 30 to 40% from its pivot. So any weakness again, this stock will definitely succumb to its profit booking, and the your stop loss will get hit. That is around 7 to 8% fall is very easy for these kind of stocks. And also you can see 200 DMA has never breached. This is very good sign if you're talking about this company. And if you are holding okay in okay, this 25% one client has asked, this 25% indicates that the stock has hit power to pivot. That is the stock advanced uh, more than 20% in a quick succession. That is within the 3 weeks of breakout. If the stock advances 25%, then it is considered as a power to pivot stock. According to our O'Neill methodology, when a stock hits power to pivot, will continue to hold the stock for another 5 weeks. So this stock has it power to pivot. That is the reason this box of 25% is written here. I'll take PI Industries next. Again, a good growth story, a growth company, currently trading near its pivot for stage 4 cup with handle. Today, the stock broke out actually, but on closing basis, it closed near the day's low. This is a not so good sign. Uh, you can we would want on the day of breakout, we would want the stock to close near the day's high, as mentioned previously by my colleagues as well. The volume was on the higher side, above average, but the closing is not so good. So it's definitely not a breakout on the closing basis. But if you look at the base formation, you can see the length of the base is nearly 1 year. This is not so good. We would want the consolidation, that is base formation happening around 5 to 7 weeks. That is an ideal period. Any longer tenure bases are not proper. I can see lots of volatile actions happen during the base formation as well. There is a series of sell-offs happening, and again buying happening followed by sell-offs. So there is no clear momentum in this particular stock. That is a reason that is for the last 1 year it is consolidating. Recently you can see after reclaiming its 200 DMA, there is some good momentum happened in the stock. But now around its pivot of 3500 3450, there is a resistance for this stock. If that level is reclaimed and the stock closes above that level, then we might see fresh rally happening in the stock. Talking about its ratings, fundamentally a very good company, there is no doubt about it. I can see EPS of 91 indicates the same. EPS has grown nearly double digits for the last 4 to 5 quarters. Sales have also grown double digits, which indicates a good growing company. However, the number of funds invested have come down slightly, 3.5% down in the last quarter, which is not a very good sign. We would want the number of funds to be going higher. That is a good indication of institutions taking fresh positions. We would want the support of institutions, because whenever there is a weakness in the market, these institutions will give support to fundamentally strong companies, because they have the money power and support, so they can give the support to fundamentally strong companies. But when the institutional support is coming down, then the stock will definitely succumb to high selling pressure when the overall market structure deteriorates.
Raj, I can take a couple of. We can start
Sure.
with RPG Life Sciences, RPG.
Okay.
See, RPG is an integrated research-based pharmaceutical company, and I think the main three divisions for RPG Life are domestic formulations, international, and the APIs. So I think API has a very small contribution to revenue, maybe 12 to 15%, but the major revenue comes from the domestic formulation, and that is somewhere around 60 to 70% of the revenue comes from the domestic formulations business. And I think a lot of brands have been associated with the RPG Life Sciences. If you look at the technical setup, it has completed its stage 2 cup with handle base formation, and it was trading in an ideal buy zone since last couple of weeks. After the breakout, it moving sideways, but today it again gave a very strong move, and that's why I came to a lot of notice today, as it was up 8% on a market which was relatively on the weaker side. If you look at the market cap, it's a bit on the lower side, just 1200 1300 crore. That also after since last couple of weeks of momentum. But the problem is number of fund holding is very low. I think only 9 funds are there, and if you look at the shares held by fund, that is only around 25 26,000, which is very low relatively. And generally at William O'Neill, we focus on the companies that are having higher fund holdings, higher number of shares held by fund, and not on the companies that are having low fund holdings, because ideally you don't want to go into the companies where the institutional holding is very low. Overall fundamental stability, it is increasing. So if you can see, the EPS growth is very good, around 40%. Return on equity of around 20% is good. Since last couple of quarters, the results have been also on the better side. And historically also, if you look, the margins have been quite well consistently increasing. So overall, the setup for the growth driver as well as the technical setup for the company is good. But just one thing, the number of fund holdings is very less relatively what we look for. And currently, it is just above its ideal buy zone. The ideal buy zone is somewhere till around 750. So yes, it is a bit higher from its ideal buy zone. So whenever there is a pullback, and if you have a confidence around the story of the RPG Life Sciences, their domestic formulation business is really good, no doubt about that. Then it can be the part of your watch list. And on pullback to its 21 DMA or 50 DMA, maybe you can look for the further addition. Let's look at Power Grid. So see, power sector is going through a very good reforms, and Power Grid, one of the leading player in the industry, and you can see it is generally a slow mover. So it is not something like high beta stock. It generally moves gradually. Even if you look on the weekly chart, and you won't see that there is a major movement on the either side. Like there was some shocker during the COVID fall, like all the stocks had, but then you see it gradually moved higher, and it's dividend, consistent dividend giving player. If you look at the fundamentals, the book value is just around 2.1%, and the yield is more than 5 to 5.5%. If you look at the dividend yield, यहाँ पे fund holdings भी gradually improve होते जाते हैं. So last quarter also, even a higher base of 1000, you can see some 8% growth in the number of fund holdings. But the key things to look for is the power sector reforms is very good. And other thing, if you can see the company specific, the earning visibility is good, which is led by the robust capitalization. So last year the capitalization was very good. Even this year they are it is expected to be better. And I think with the more reforms around the power sector, जो पेमेंट का इनका इश्यूज होता है गवर्नमेंट्स के साथ, स्टेट गवर्नमेंट के साथ, अदर जो भी कंपनीज है स्टेट गवर्नमेंट्स की जो पावर हैंडल करती है, आई थिंक वो धीरे धीरे वो डिस्प्यूट्स कम होते जा रहे हैं. द कैश फ्लो विल बिकम वेरी नॉर्मल for these firms, and I think that might give up this a bit no premium valuation maybe. So overall, currently it is forming a cup with a handle base, and it has good support near its 200 DMA. So ये थोड़ा low volatile stock है, right? Even in this market, so 250 DMA पे generally ये अच्छा support लेता है, and currently it is just 2% below the pivot. Handle formation almost complete हो गया है. So what you should look for is the ideal buy zone. So this can be the part of your watch list, and 232 is the level that you should look for. So from 232 to 5% is the ideal buy zone for the stock. Last एक आध quarter का result इतना encouraging नहीं था. The growth was, the EPS growth especially was not that good. But however उनका जो single digit, higher single digit का जो revenue growth है, that was able to seen in the last quarter. So overall a good story, a bit stable stock, dividend yield wala and low volatility wala. But yes, ideal buy zone is very close for this stock.
Makarya, you mind if I take some query?
Sure.
Rashikar, can you give me DMAT? So overall, if we talk about DMAT from a technical perspective, the stock is still about 23% off highs, which probably doesn't suit the canceling perspective as well. And on the second part, if you look at it, the stock is not forming any base at the moment. So that is again negative. And if you look at the RS line as well, after inching little higher, the RS line is kind of trading in the sideways direction. And if we and overall in the last few days as well, if you look at it, and the stock is moving higher, the volume had kind of dried up. So you cannot see any big blue bars above your average line, and that is a concern for the stock. So, and the other concern that I would like to talk about is like probably the number of funds. What Rashikar is rightly pointing out, that one, like At one point of time, the stock was a favorite or a darling for the institutional investors and as well as retail investors. But at the moment, you can see number of funds and shares held by funds declining at the moment. The reason can what I can decipher is at the moment is even with your on a lower base, the revenue, EBITDA, and your PAT grew very significantly in probably high double digits and triple digits as well. But what the management highlighted in terms of the commentary that even the general merchandise and the apparel witnessed uh, relatively better demand, but it's still not back at pre-COVID levels, as the discretionary categories are still impacted. So what we can probably decipher is the stock is, I mean, in terms of recovery, this industry or the stock is still not able to come back to the pre-COVID levels. So probably a quarter or two more, one should probably observe the stock in order to for it to deliver some kind of fundamentally driven performance as well. So let's wait and watch this stock at the moment. Uh, Raj, the other one I'd like to discuss is Deepak Nitrite. Thank you. Thank you, Ram. So very similar chart to what we looked about with Avenue Supermarts, even we looked at it. This is even on a downward side where you're probably your Nifty is like just around 4 to 5%, maybe 6% off highs. This stock, once like a pure play growth story, is at the moment 33.6% off highs in a rising market. So currently not probably delivering the kind of fundamentals it should have delivered in the last few results. We discussed that also. And what I can see it, if you look at the 2134 levels, that is your 200 DMA. The stock just wasn't able to reclaim that 200 DMA, and it just could not sustain it, and it came back. So that is never a good sign. So if even probably if the stock would have reclaimed that 200 DMA, Raj, can you show me the volumes for the stock? Just down, yeah. Yeah. So if you look at it, even the only good part is probably that in the fall the volumes are dried up, but still doesn't justify when the market is probably rising and the stock is not able to probably reclaim its 200 DMA and is trading around like 33-34% off high. Definitely, there's some issue with it, and that's why we talk about the last result as well. The only thing which I can talk about is like the advanced intermediary segment, which is one of the high growing segments for the company, has been a major laggard, and even the stock is finding extreme your gross margins pressure mainly from rising benzene prices plus other key raw material prices such as nitric acid have also risen by around 2.5 to 3x. So margin pressure does remain elevated for the stock, and the stock does need to deliver on the fundamental front, probably on the revenue as well as on the margin front, for it to probably take it above this synchronous line of your 200 DM and maybe form a base in future. Raj, the other I'll take is Hindustan Aeronautics. Thank you. So overall, if we look at the canceling parameters, it's probably satisfying it to the fullest in terms of EPS strength, grade at 97, price trend, everything is fixed. Group rank is fixed. Even the RS line is trending higher. But if you look at the stock, the stage count for the stock, the stage count for stock is stage 4. And we always advise that stage 4 or higher have uh, higher chances of succumbing to failure. And there are few stocks like people would probably point out like HAL, the Fineotex Chemicals, or Tata Elxsi. They've been moving higher above their stage 4 basis, but those are the rarities. in terms of the stock market, where probably a stock not just breaks out from the stage 4 base, but even moves higher above the stage 4 base. So probably it's good to there is ample of opportunities in stock market, and it's better to probably stick with rules and follow a strict risk management perspective rather than just chasing out everything that's moving higher at the moment with stock. There is ample of opportunities in the market at the moment. Prishit Raj, is taking anything? We can take a couple of queries and then just wrap it up. Yeah, already 5:36.
Okay, I'll take one Pidilite query. Stock broke out from its stage 1 double bottom recently. You can see it broke out the first week of August, and since then it has moved with the sideways with a positive bias. However, in the last couple of sessions, stock closed above its ideal buy range on Tuesday and today as well. A very good buying happened today. Stock closed more than 3% higher on volume, nearly double the average volume. This is what we want in stocks after breaking out from their base patterns. Uh, However, if you look at the stock from only lens, uh, fundamentally the stock is very good, but due to its previous December and September quarterly results, EPS has slightly come down to 53. However, in the last two quarters, that is March and June quarter, company has reported good set of numbers. So this number is expected to improve EPS. That is the fundamental rating. Price strength is at 65. It has also hit blue dots recently. That signifies the stock is becoming an outperformer when compared to the general market. Buyer demand of A also signifies good accumulation demand for the stock among the buyers when compared to the supply. Overall, a very good company. There is no doubt about it. It's a major leader in its segment, glues and other adhesives. It's a leading company in that space. However, the technical front, the stock has not so outperforming when compared to other stocks. RS of 65 is not so good, and the overall market structure is very constructive at this particular moment. We would want RS rating to be above 75 to 80. That is the reason we have stayed sidelines. Also, the EPS is not so good. Below 60 is not so good. It belongs to poor category. So in these turbulent times, it's better to go ahead with the 100% conviction stocks rather than going with all the stocks which are breaking out. However, if you are holding this stock in your portfolio, you can continue to hold it because not so major selling happening in this particular stock. You can keep 21 DMA as a stop loss, which is 6% from the current market price. Regarding stage counts, we have we have an article on our website. You can browse through it and you will get a clear idea.
I just posted it in chat box.
Okay, Rishit. Yeah. Now already 10 minutes paused our session, so I think I'll take one more query and we'll call it a day. Tata Consumer Products. Stock has been trading in a consolidation base for the last 1 year, and it is currently trading in its stage 3 consolidation base. You can see RS strength is not so good for 44 because the overall markets have been at nearly at all-time highs. Most of the sectoral indices are also at all-time highs. This stock is still trading below its all-time high. That is the reason it is underperformer, and RS is at 44. Apart from that, fundamental very strong company. RS EPS of 91 signifies the same, but technically the stock is not giving a good breakout. You can see for the last 1 year it has been trading in its consolidation base pattern. That indicates there is no proper momentum for the stock. Uh, However, there is a good demand for the stock also around 600 to 650 to 670 level. That is a very good demand zone for the stock. On the supply side, you can see 830, 840 level. The stock has been facing the supply side resistance. It is not able to close above that particular level. If that happens, and the pivot is also nearly at 900 level. So if that happens, then we might see a good fresh rally happening in this particular stock. Other parameters like number of funds are consistently flat. That is not so much improvement. We would like the number of funds also to increase on quarter basis, indicating a good demand for the stock among institutional investors. Very good fundamental is good story, but the technicals are not giving good buy point. And however, if you have this particular stock, you can keep again 21 DMA as a stop loss. Recently, the stock has uh, tested its 21 DMA and closed above that level. So that level might act as good support going forward. If that the stock closes below that level, we might see a stock retracing back towards its 200 DMA as well. So in order to safeguard your profits, I can keep a short-term moving average, that is 21 DMA, as a stop loss. Uh, I think we can call it a day now. What do you say, Rishit? Waqar?
Yes, Raj, we can call it a day. And if yes, we weren't able to answer
You
any
guys can
queries, but
email us anytime. That's not.
yeah, you can email us anytime, as Rushit said, and we'll be always there to answer you with your queries and guide you in this investing process. And let's move up in this learning curve together. And probably you guys can always join us on the pre-well and the after-hour session as well, that we probably do every morning and evening. Uh, Rushit,
Yeah,
if you want to add
thanks.
something, yeah, thank you. Thank you,
Yeah,
everyone.
thanks everyone for joining. I hope we were helpful during this session. Again, we'll be always trying to help you guys regarding this learning curve. Always, you can write to us on email. We'll try to explain in detail our methodology as well. We have lots of content available on the website as well, and as well as on YouTube. You can browse through that content as well. You'll get a clear idea of our methodology, and you'll get to know more about us. Thank you.